Let's play the intro music and get started with a market overview. I'm not working for the next couple of weeks, and I thought it'd be good to put out some better quality videos. So here I am on the desktop. I'm not going to include my camera. I think I want to bring this channel into a very technical place where all I'm doing is giving the charts and the analysis and really just kind of taking everything else out of it just so it's raw data, raw analysis, just the good stuff. On SPY, we had a pretty bad day today. It was a red day, and if you watched Capavision last night, you know how important this uptrend is. I do have a premium subscription, Capavision, it's $1.99 a month, and you get access to a private channel in the Discord server as well as a weekly episode on the weekend. And I go over a lot of analysis, bigger trend stuff, bigger picture things, and I also give a lot more charts and analysis in the Discord channel. So if that interests you, maybe it doesn't interest you yet, but watch and see, and then you're going to want to hit join. This is good stuff. We did see a bounce today, which was encouraging. This candle did look pretty ominous when it was at its low, and we had this nasty long day coming in. We do have a close below yesterday's close, not great, and it is barely within the prior trading session's range. This is not a great return after the Labor Day weekend. It's really not. It's looking bad. This was an opportunity to bounce. Encountering this level of support was an opportunity to bounce that did not shape out. So XPXU, an ETF that trades inversely to SPY, this is like a short ETF. It's starting to form a very, very bullish motive wave. Initially, you start with a corrective bounce higher, a measured move up, and there's 3 phases in that, and I have those labeled here as minuet waves 1, 2, and I don't have 3. And these really should be corrective waves A, B, and C, but I'm already considering this to be a motive wave and that this push higher is the beginning of another third wave. And if you don't know what a motive wave is, this is basically saying that I am expecting the price to form a channel up and to continue in this channel higher, breaking this downtrend and confirming a really interesting inverted head and shoulder bottom pattern. And when we get above this trend line, this would be a good spot to see a big push higher, a big push higher. Whether or not that happens this week or next week, I'm not entirely sure. It's possible that we're actually going to see a bounce in SPY, which would cause retracement in SPXU. There are some hints of that, but I don't want to get too far ahead of myself. I think really this week we're looking to follow this trend line in SPY, and SPXU we're probably looking to follow this downtrend, and then next week we'll see the big pushes when we get CPI data. I believe that's next week, is that not? Yes, in a week from today. So maybe a few candles forming a nice little bear flag, maybe we get a corrective broadening pattern, but overall, I am looking for consolidation through here, and then bad news to be a catalyst and to mark where we're going to find that downward breakout. The news isn't causing the move, but it is a part of the process that the market responds to it and starts going lower. Now, GLD is still pushing down too, which is really frustrating for me because I've been waiting for this correlation between the equities markets and precious metals equities specifically to diverge, become negative, so that the panic buying of gold, right, that occurs when the fear selling of equities begins. And we just aren't there yet. I think breaking this trend line will signify that moment. So GLD at the moment coming down, and it's still above 158. That's a big level. I've been talking about that. Perhaps what we're going to see is one more little red day, and we might get a swing failure pattern here in the RSI. That's to say like a double bottom in the RSI, and then we'll see a move higher, breaking this temporary down, not temporary, I mean all trends are temporary, but this more local short-term downtrend, and we'll start to see a reversal, and that could play out into a larger pattern as well, which I go into in Capavision. Now, the dollar strength index, Dixie, DXY, pushing up and out. This is a big move by the dollar. It really is. I have triple bearish divergence right now charted on the RSI for the Dixie. And today, I believe we're coming up right up to that level. And there was a stop there. But are we going to see a reversal? We won't know until tomorrow. But if we do see a reversal here at this triple divergence in the dollar, that dollar strength loss could support a rise in precious metals. And that is really another thing I'm waiting for too, is for the dollar to stop this insane rise it's been on. But I don't know if that's actually going to be the case. And I did do some study, and it appears to me that the correlation between GLD or gold futures and the dollar strength, the correlation actually becomes positive at the top of motive waves or at the top of corrective waves, which I find really interesting. There's something about the modality of the precious metals markets and the fluctuations in the dollar, and the dollar rising does not necessarily mean that we're going to see gold drop. And I can make that determination based on the correlation. Of course, it's not 100%, and that's the other thing too, is it looks like it might be one of those instances where I say 3 out of 5 times you have a positive correlation at the end of a motive wave in GLD. You're looking for a reversal also in the dollar. And the dollar is at a very strong point where it may begin to reverse, and gold is in a very important place where it may begin to reverse as well, and the correlation is very negative. And so I'm looking for perhaps even a positive correlation between GLD and the dollar, and that's going to be nuts. If the dollar starts rallying with gold, that would be hard for me to explain. But again, these market dynamics are really, really complicated. DXY, the dollar strength, is not an equity, and its strength is relative to other currencies. So I'm babbling a lot here, and I'm just going to keep moving. There's a lot I want to go over. Let's talk about APE and AMC really quickly. I understand there's a lot of people, a lot of my followers, you want to see this analysis, and it's just been kind of boring for me because it just keeps dropping and dropping and dropping and dropping. So what am I looking at now is a half-staff tilted flag. If you look at Bulkowski's webpage on this, you're going to see that he doesn't encourage trading until you break out the bottom of this thing. And it looks like we're just about there, doesn't it? It looks like today was finding the very bottom of that flag pattern. And if we get another red day, that's going to be a confirmation. And I'm going to start looking for more downside. This implies that the move down from 26 or whatever it was is only half over, and we're currently sitting near $13 if you add the value of APE. So yeah, the chart pattern analysis on AMC is seriously targeting very, very low ranges, $2, $1, and I'm serious. That's what the analysis is suggesting. If you get a full move, a full bearish continuation pattern at this point, is lights out for AMC and APE. That's just what it says. Are we going to get there? I don't know. It's pretty often when you do get those ridiculous price targets that you only get half of the move. Even then, that would still take, AMC and APE way, way down. Right now, realistically, I think what we can expect to see is for the combined value of AMC and APE to reach 970, which was that previous low, which I forecasted perfectly 4 days before it happened. So that's what I'm looking for here, just more downside continuation. And now let's talk about SPY. I've been doing a lot of charting on SPY, and if you like what I'm about to share here, then you need to join Capavision, because I do this on a grand scale. This is the fractal theory. It's Elliott wave analysis. Don't get caught up in some other random person's ideas. Study something real, like Elliott wave theory. Frost and Pretch wrote a book about it, the Elliott wave principle, and that's where I go to for almost all of my Elliott wave theory. And what I do here is I apply that theory, and I do it to either validate analysis or to invalidate analysis. And so far, my analysis is the only analysis that I see that is worth following. Okay, Cap, get off your soapbox. No one wants to hear that. So what happened the days leading up to Jackson Hole? You remember when Powell spoke, he said pain, and it was just like, the markets start crashing, right? A little bounce, and oh my goodness, and it just kept going and going. Well, let's talk about it. This was a bull trap. What's a bull trap? It's not a real thing. It's just a trick, supposedly, to trick bulls. You get people who are super bullish, and then bam, you catch them. Like, oh my goodness, I was wrong, and then boom, the price dumps. It's not a technical thing, but I can understand why this pattern is very tricky. First things first, corrective waves occur in broadening patterns like triangles. And now triangles can also consolidate. It just depends which way the triangle is facing, and yes, it can go either way. Triangles will go either way. They are not biased, they have no preference, and whatever causes the most chaos seems to be what occurs. So at the time that this was occurring, that this pattern was forming, obviously this lower trend line was shown as an uptrend, right? Okay, here we go. We're going up and up and up and up. And the first thing I did, of course, was I said, are we in a channel? That's my first question. And it looked as if we were, right? We have a touch point here. So this would have been motive wave 1, 2, 3 coming up here, 4, and then 5 throwing over that top trend line. The only problem is that there is an overlap here between what would be motive wave 4 right here where my cursor is and the top of motive wave 1. On the closing basis on the hourly chart, you can see that there wasn't actually any overlap. It's all intraday overlap, but there's still overlap there. So I say first and fourth impulse wave overlap, and I guess the fourth wave isn't an impulse wave, it's corrective wave, but it's the first impulse wave and the fourth wave, which is a corrective wave. They overlapped, and so this was the only hint we had that this was actually an ending diagonal triangle. And that was the only cue we got. And I because it didn't occur on a closing basis, I was okay saying, yeah, 4 and 5. And then, looking for A, B, C correction, A, B, maybe this was that correction and we're looking to start a new motor wave again. And we did see the price push out up and higher from this channel again when that volatility from Powell's comments started to enter the markets. However, the pattern quickly broke down. We had this big fall, and it was right here at like $415. I said at everyone, I think the stock market's crashing, and now we're like sub 400, yeah, and pushing down. And the way I came to that quick conclusion was we came into this first range of the first impulse wave of this pattern, and so that sucked. And if only I had paid closer attention, I've said it before, that overlap between 1 and 4, that's a mysterious thing. It can matter, it sometimes doesn't matter, so I'm really trying to figure out what's going on. I could have avoided the whole problem if I had just charted the peaks, the first 2 peaks, like I usually do. I was watching some of my older videos, and I say, once you put a line down, you don't move it, and that's what I should have done. I should have connected these 2 highs and then just forgot about it and said, that's what we're looking at. We have a broadening pattern, and in Bukowski's chart pattern analysis, it's called an ascending broadening wedge. If you visit his website, thepatternsight.com, you can find that page. It's a whole article about it. He describes how when price comes into contact with the lower trend line, as it does right here, and bounces and fails to rise to the top of the pattern, this is a partial rise, and as the price turns down, this is a bearish thing, and it almost always works. That's not true. It's like 65% or something like that, but that's a pretty good odds if you see a partial rise in a broadening pattern like this. And especially if you know and understand that the Elliott wave degree above here is down, then you pretty much know that the price is going to go down. So between the Elliott wave theory and the chart pattern analysis, you can create these really awesome forecasts. And so I broke this down and I showed the 5 touch points in the minuet waves, A, B, C, D, E. And then we come down, partial rise, and dump. Huge. The price target for this pattern, the ascending broadening wedge, is the bottom of the pattern, and the price did just right in the middle of the day, it hit that, and then it just kept going and going. And this was nuts. This was a huge sign to me that the markets were going to push much lower, because it confirmed to me that the degree higher was still down. And I haven't gone through and I haven't broken apart the beginnings of this downturn at 431. I'm serious, right here on this green bar, I said in my Discord, hey, target reached. Watch out, be careful, know where your stops are. And it's like, whatever, Cap, you're crazy. This thing's going higher. Look, it's great. This is a new motive wave. It's finally happening. Yay. Even you were calling for the everything rally, and I was, and I said, I think it stops right here. And it did. And then we had this big dump. I'm calling this a first wave, and this is in the minute degree. And then this would be wave 2. And so what I would do is I would first, I'd be drawing the pattern here and just looking for a nice consolidation pattern. That makes a good 2 wave, right? And because that wave is happening on the minutes time frame, I'm actually going to color it white as well. I color code my charts. So there's 3 tiers of Elliott wave degrees, and each of those tiers has 3 sub tiers. And so I think of it as assigning a color to each of those sub-tiers. Yellow the bottom, blue's the middle, and white's the top. So you have yellow, blue, white, yellow, blue, white, yellow, blue, white, going from sub-minuet to minuet to minute to minor to intermediate to primary to cycle to supercycle to grand supercycle. And those are the 9 degrees of Elliott wave theory. And they aren't linear. That's a circle. That's a circle. When I talk about that, it's like music, the circle of fifths. There's no top, there's no bottom. And it's just fractals and fractals and fractals and fractals. And so that's what this study is. And I just wanted to explain that really quickly to help guide you through my charting, which has a very specific look. And it's starting to look really uniform, which I'm also really proud of. And so when we have, now that I have that explained, let's talk about like a corrective phase. Like this is a wave 2 to me. It's pretty clear because you have a pennant, it's consolidation, and that is what corrections do. And there's also a few hints here. We can see that there's pretty easily a 3-wave push through here. That would be a corrective mode move. Corrective modes move in 3 waves. Motive modes move in 5 waves. And so when you can break price action down into 3s, you have a pretty good understanding that you're in corrective mode. So here's like 1, then this weird high wick candle in here, 2, 3, 1, 2, 3, 1, 2, 3, and I'm looking for 1, 2, 3 again. And I can give right there on that red candle, right? 1, 2, 3. What's tricky too is sometimes you get really close to the opposing trend line, but you don't quite reach it like here. So here's a 3, here's a 3, here's a 3, here's another 3, and then 1. This one pretty much crosses the whole pattern. 3, boom, failure. All right, so here you have A, B, C, A, C, E, because A, B, C, D, E, and you're looking for an upward breakout. And so this was a false breakout right here. And there was a lot of volume too. Very interesting, but look at the RSI, it's wishy-washy. It's not quite strong. And then the price starts to grind against this top, and that formed at that peak. So once you saw that open, boom, the next day on the 18th, yeah, lights out. That's 2. This was 1. And you know, sometimes it's hard because it seems like there's almost like a corrective mode first. Like this ABC, this is correcting a push higher. That was motive, right? It was, of course, in a rising wedge. And the wave pattern in that wedge didn't qualify it as a leading diagonal triangle, which would have been incredibly bullish. But it wasn't, didn't qualify, didn't have the overlap that leading diagonals have between waves 1 and 4. I was talking about that earlier. So this was that correction, and this correction actually was an impulse, but it only has 3 waves. And that's the trick, is impulse waves can do that. I mean, we could break this down if we really wanted to and say this is wave 1, wave 2, wave 3, wave 4, and then wave 5 dies right here, and that wave 2 is actually much smaller than that, and wave 2 is just this tiny little thing. And you can do that too, and then say, hey, wave 1 ends right there at a truncated 5th wave. And what that means is that that 5th wave didn't push further than the 3 wave did, which is fine. And in fact, that's probably the best way to look at this is 1, 2, 3, 4, 5, and then we start our triangle 1, 2, 3, 1, 2, 3, 1, 2, 3. So here we have A, B, C, D, E, and breaking out on E is bad. Oh my goodness. Breaking out on E is so bad because generally you get to break out the other direction. You want that 3rd touch point to be on the opposite side of the direction you want to go. And if you want to go up, this would have been great, but it wasn't. It was down. So you know it's going to be a pretty heavy breakout. And it really was. It really, really was. So I'm working on this, and I guess let's just move up to the present. This is gonna be a long one. You're welcome. This is just good analysis. This is what I used to do. I used to just share the analysis and just walk through it. People liked it. Let's go back to that. Let me show you where we're at currently. So we talked about this first impulse wave, that little corrective wave for 2, and then 3 was a huge dump. 3 is a very powerful wave. It almost always is. And then we had a corrective wave 4, which was this ascending broadening wedge, which I already broke down for you. So here's the bottom of minute wave 3, and here's the top of minute wave 4. And then this big dump and this big dive, this starts an extension. And here's the thing, I'm not sure if this is a fifth wave ending the motive wave cycle, or if it's all an extension of this minute wave 3. If this is an extension of minute wave 3, then this could just be 2 of 3, right? This could be 1, 2, 1 of 3, 2 of 3, 3 of 3 coming down here, 4 of 3, 5 of 3, A, B, C, and then we start wave 5, 1. But this can't be wave 2 of wave 5 because guess what? Look at this tail. This tail comes above the highs of what would be wave 1. And so wave 2 cannot fully retrace wave 1. And so that count breaks down. So we had to wait like 2 weeks before we got a bounce to really invalidate that third wave extension. So now that I say that, I'm like, okay, this counts right. Wave 3, wave 4, wave 5 starts with a big dump down, and it starts to extend, and it does so in a dying fashion between two converging trend lines. So you have the infamous falling wedge. And in Bulkowski chart pattern analysis, small triangles like this, you would just chart and analyze them as pennants. And it's pretty clear what's going on here. This is this is a motive wave losing steam, and it does so through its third wave extension. So you have one push down for 5 of 1, or I should say the first, follow me here, the first minuet wave of minute wave 5. That's what this blue 1 means. So the degree is superior is the minute wave, and it's 5, and it's down. So I'm looking for 5 impulse waves pushing lower, or a motive wave down. And we have it in this falling wedge. I hope that follows. So push 1, and then that corrective wave 2, that corrective minuet wave 2, it formed an ascending broadening wedge as well, also sporting a partial rise there at the end of the pattern, and breaking down. And then we start to extend that third minuet wave. And so we have minuet wave 1 of minute wave 5, and then we have minuet wave 2 of minute wave 5, and now we're going to start breaking down the third minuet wave of minute wave 5. And so we do that with sub-minuet waves, 1, 2, 3, 4, 5. And then a corrective bounce A, B, and C. And what that does is that completes minuet wave 3 and creates minuet wave 4. And I have these dashed lines through here to show you the relationship between the low of wave 1 and the peak of wave 4. This is common. Look at how close together these are in price. In fact, is there some overlap? In fact, I should have blown this up much earlier. I'm sorry. Wave 1 reached down and closed here on the hourly time frame at 400, and you can see wave 4 here coming above. And it's like, that wave 1, wave 4 overlap. It's so frustrating. These do look like pipe tops on some time frame, maybe not this time frame, but big moves. So it really begs the question, was this just an overshoot and this is why we got pushed down because this overextended? Or did wave 1 end here because it traveled too far and then corrected higher? It's hard to say. It's really hard to say. It may even be true that wave 1 and wave 4 have some give and take, because when I looked at this, these impulse waves here, this is a much further push into that first wave. It really is. And this is just like a little, whoops, it's a much smaller move. Nonetheless, let us keep going. You can see also here in the subminuet waves, this is the extent of subminuet wave 1, and I show a horizontal dashed line, and you can see wave 4 here came up to it, almost to it, but didn't. It failed to reach it. That's what you want to see. And then boom, little 5 wave. Little teeny bitty 5 wave. 1, 2, 3. And now we're starting that 5th minuet wave to follow through with our this was a corrective and this ended 4. So we're looking for 5. And I'm just right away saying that this probably isn't, this first little dip from 4 to 390, that this is not wave 5. And we're probably extending wave 5 because I'm not even sure if this third wave extended. Minute wave 1 started up here at 431 and came down to about 424. So $6, $7, that's not a lot. It's not a lot. Wave 2 ended at around 426, and wave 3 went all the way to 410, so $16. So it was like 3 times as tall as this first wave. And so maybe this is all part of wave 1. And then this is wave 2, and I'm actually charting a third wave extension. Do you see how that works? That is how the fractals work, is that 1, 2, and 3 right here. This could actually be 1, 2, 3, 4, and 5, and wave 1 actually ends down here, and this is a very small wave 2, and now we're moving into a third wave extension. It can just keep fractaling out bigger and bigger and bigger. It really can. At this point, though, I'm pretty comfortable in saying that we have waves 1, 2, 3, 4, and this was 5 with a correction, and now we're looking for another motive wave down to complete this. And I'm expecting that to occur within a channel because motive waves often fit within channels. And so I've just taken the height from the top of 4 and to the first bounce we found on the second and said that's probably the height of our channel and put it down. And you can see that when I take today's intraday high and form the channel, that it comes into picture really clearly, and we can start to expect to see, I believe, 380 for the bottom of wave 3 and then a bounce for 388. Now, I was just saying SPY is probably going to grind sideways along an uptrend, right? And this would actually support a downward breakout. So this is going to be the test, is if the price can maintain this channel. That's very bearish. If we get bearish continuation past that corrective uptrend, then I'm seriously looking for like 368. And you know that's very close to the lows that we set earlier this year. And that's exactly what I'm saying. That's what I'm looking for. Now let's zoom out here and let's see if I can get this whole thing, break this down. We're going to see if I can get this whole thing to fit into a channel too. Auto zoom. And so let's see here. If I just take that peak and I run down here, you can see that there is clearly a downtrend through there. This is the external downtrend line. That means that the trend doesn't cut through the price at all. I'm going to go ahead and edit this, and I'm just going to make it red because it is a downtrend. And I'm going to now, let's see here. I think I can take this and I can make it into a channel, can't I? Redraw as channel. They used to do that. Okay, I'll just duplicate it and I'll drop it down. And see, I wouldn't have enough touch points to really form a channel yet. But if this is the channel, then, you know. But maybe we're not in a channel. Maybe we're actually in another broadening pattern. Is that true? Could that really be the case, that we're in another broadening pattern? Let's see here. Well, we wouldn't be to the bottom trend line yet. I would want to cut through there a little bit. So 1, 2, 3, 4, 5, 6, 7. Oh, this is a broadening pattern, a descending broadening wedge, and this bounce and this reversal, this would form a partial rise in there. Yeah, I'm looking for a downward breakout. Whew, so that's how I do the analysis. If you liked that, if that was good, if that made you scratch your head and you said, Cap, I don't understand anything you said, then maybe sign up for Capavision. And I go over it a whole bunch. Looking for more downside later this week, I guess. I suppose I have the outro music playing here, so I'm going to go ahead and just sign off. This was way longer than I expected. Remember, like, share, do whatever you want. I'm just vlogging. You're responsible for your own trades, and as always, happy trading.